Hello, ladies and gentlemen. How are you? I hope you are doing fine wherever you are. I am the ACCA Tutor, Mr. Jerem Timkulu. If you have made it this far, congratulate yourself. You are a warrior. Okay? In week 2, we are going to look at income tax computation. Remember, we are following the ACCA Taxation UK 2024-25 tax year and the 2025-2026 ACCA syllabus, right? So this is what we are going to do, ladies and gentlemen, right? Previously, in first week, we were introduced to the theoretical tenets of UK taxation, all right? In this week again, we are going to touch on those theoretical aspects, but with the mind of tax computations. Okay, you are going to meet several theoretical aspects, especially those related to residents. All right, because by the end of the day, only people who are residents to the UK are going to be taxed on their income. Right, so if you're a UK resident, you're going to be taxed on your income. All right, but I want you also to appreciate that even if you're not a UK resident, you're also going to be taxed. Now, there are two forms of taxing. Okay, there is what is called worldwide income. Worldwide income. Okay, and income uh, at okay, or income earned in the UK. Earned income earned in the UK. So if you are a resident of the UK, you are taxed on worldwide income, which means even if you earned your income outside the UK, you are going to be taxed by the UK. Why? Because you are their resident. Okay? You are their resident. All right? Then, if you are not a resident of the UK, then you are only going to be taxed on income earned whilst in the UK. So it doesn't mean that if you're not a UK resident, then you're not going to be taxed. No, you're going to be taxed as long as there is evidence that you earned this income whilst in the UK. All right. So such aspects are actually there within within the materials of week 2, and I'm sure you guys are enjoying the notes as you are reading them through. All right. Now, there is one important thing we are going to emphasize in this particular week: the issue of layout. When you are preparing your computations, please always label out clearly your workings, and your answers should be well structured. All right, so there is a pro forma I want you guys to get used to, because when you are doing the computations, you discover that there are various forms of income which are going to be examined. All right, actually, such a pro forma is very, very important when the income in question is related to individuals. Okay, because that's the main focus of this lecture series, that is of week 2. We are looking at taxation of individual income. Taxation of individuals income. Okay, that's income related to individuals or earned by individuals. Okay, these individuals could be sole traders, they could be sole traders, or could be employees, or partners in a partnership. All right. So we're talking of individuals. We are not yet at limited companies or corporation. We're not yet at corporate tax. We are talking of non or non incorporated businesses. Non-incorporated businesses. All right. Those are the incomes we are looking at. Okay. So you will appreciate that these incomes uh, should be grouped. Okay. They should be grouped in what are called non-savings income, savings income, and dividend income. Okay, so the non-savings income we talked of. Okay, employment income. We talked of trade. We talked of uh, you know uh, that is what is called property income. There are many. Okay, there is no saving in this particular income. Okay, no saving is actually being done. Right, so the income is only from a certain activity one should could have done or could have went through. For example, provision of a service or provision of some employment to an employer, or after selling something. Right, but when we are looking at savings income, we are simply saying you have taken your money and put it somewhere where it is accruing some interest. Okay, so we are looking at bank deposits. That's an example of savings income. Okay, and then dividend income, it is income earned from investing in shares of limited companies. Okay, or incorporated businesses. So when those businesses I mean issue a dividend, when they declare a dividend, you then have some, some some dividend income. All right, and that income should be taxed. All right, even income from from interest from a bank account, it is also taxed. All right, that's the UK for you. So the objectives of week 2 are actually, by the end of the week, you should be able to understand the scope of the UK income tax and determine tax residency. Right? I've touched a little bit about those residence issues, which you need uh, to be aware of, and then you need to differentiate between employment and self-employment. Okay, you need to make a distinction. What is employment? What is self-employment? Okay, when you are talking of employment, yes, we are simply saying that you are under an employer. Okay, but when you are talking of self-employment, we are simply saying that you are the employer. Right? But it doesn't mean that under self-employment, uh, you are going to be an employer, because for you to be an employer, it means that you need to have an employee. Sometimes you're just doing the work without anybody under you. All right, so it doesn't mean that you're always going to be an employer. So in a multiple choice, if they say which of the following statements are true, you should be able to to articulate and come up with the proper answer. All right, so self-employment, we are simply saying that you are the employer of your own self. Right, your own employer. All right, you are, you call the shots. Nobody's going to tell you what to do. Okay, so in some textbooks they call them independent contractors. All right, you're an independent contractor. Okay, you decide when to wake up and do the work, okay, and so forth. You are in control of the processes, all those things. We have listed all these technicalities in the notes. All right, so please refer to those pages. Then, by the end of the day, of the week again, you need to be able to analyze self-employment income, allowable expenses, and the reliefs. You should be able to do such or to meet that objective. Then you must be able to explain and compute taxation of partnerships, including changes in profit sharing ratios and memberships. Then lastly, you need to be able to describe and apply alternative loss relief claims available to partners. So these are the objectives, but we are not only going to remain there. We are also going to do, to appreciate and um, compute income tax of individuals. These individuals, as I have already indicated, could be employed people, could be sole traders, which are the self-employed people, okay? Could be partners in a partnership, okay? You need to be able to compute their tax by the end of the day, determine how much they should pay to the taxman. All right, now let's dive into tax computation. But here, as I've already emphasized, we are not going to read the notes for you, all right, but we are going to jump to those areas we feel you need to, you need the tutor to explain about. So let's dive into the pro forma, the tax computation pro forma. Okay, ladies and gentlemen, this is the pro forma I'm talking about. If you have got this pro forma in mind, you are going to pass this examination. If you could memorize this pro forma, you are going to be home and dry. Okay? You're going to pass this examination once and for all. All right? Right at the first attempt. So, for the year 2024-2025, this pro forma is going to be applicable. All right? So, what are we looking at here? All right? We're looking at a well-structured layout, all right, for the computation of income tax, all right, or taxable income, all right, because by the end of the day, you need to determine the taxable income or the income that should be subjected to tax, all right. After this pro forma, you then do your income tax computation. The computation of the income tax liability or income tax payable. All right, but before you go to the income tax payable, you need to determine the taxable income. Okay, because this is the product. This is the figure we are, we are trying to come up with, because this figure has got rules. All right, there are rules that affect. So the quantity, okay, there are certain levels which, in the UK, they they use what is called progressive taxation, progressive tax. Okay, individuals with low income, they are taxed, with some low, tax rates. But as you earn more, you're going to be subjected to more tax. All right, that's progressive taxation. So this is why I'm saying that you need to determine the taxable income figure.